$53 billion. That's how much US Treasury debt China dumped in a single month. Not sold gradually, not rebalanced quietly, dumped like they were unloading toxic assets before a crash. And Wall Street barely blinked. CNBC ran a 2-minute segment. Bloomberg called it portfolio adjustment. The Treasury Department issued a bland statement about normal market activity. Normal, right, because when the world's second largest economy liquidates $53 billion in US government bonds in 30 days, that's just routine financial housekeeping, except it's not. This wasn't portfolio rebalancing. This wasn't risk management. This was Beijing sending a message, and that message is brutally simple. The economic marriage between the United States and China, it's not just cooling off, it's heading for divorce court. And China is hiding assets before the settlement. So let's cut through the financial jargon and the reassuring statements from officials who are either lying or clueless. Because what China just did isn't about interest rates or yield curves or any of the technical nonsense analysts are spinning. This is about economic warfare, and the first shots have already been fired. I'm here to show you what's really happening. Not the sanitized version, not the everything's fine narrative, the raw strategic reality that should be keeping every economist, every policymaker, and frankly, every American awake at night. Because when China starts weaponizing the one piece of leverage they've held over Washington for 2 decades, that's not news. That's a paradigm shift. And nobody seems to be paying attention. Let's establish the foundation here. For 20 years, China and the United States had what economists called mutually assured economic destruction. A cute term for a terrifying reality. The deal was simple. China manufactures everything. America buys everything. China takes the dollars they earn and loans them back to the US government by buying treasury bonds. America uses that money to buy more Chinese goods. Rinse, repeat, forever. It was symbiotic. It was stable. It was the economic engine that globalized the world, and it just broke. November through December 2024, China sold $53 billion in US treasuries. That's the largest single-month liquidation since the 2008 financial crisis. And unlike 2008, this wasn't panic selling during a market crash. This was deliberate. But here's what makes this truly ominous. China isn't just selling treasuries. They're systematically reducing their exposure to dollar-denominated assets across the board. Corporate bonds, selling, mortgage-backed securities, liquidating, even their holdings in US real estate and equity markets are quietly being unwound. Beijing isn't rotating into different US assets, they're exiting the dollar ecosystem entirely, and they're replacing it with something Washington doesn't control. Gold, yuan-denominated bonds, BRICS currency initiatives, bilateral trade agreements that bypass the dollar. So here's the critical question nobody in Washington wants to answer. If China is systematically divesting from the dollar, what do they know that we don't? Let me walk you through the nightmare scenario that's currently unfolding in slow motion. The United States has $36 trillion in national debt. Trillion, with a T. That number is so large, it's almost meaningless to human comprehension. So let me make it concrete. Every single day, the US government pays over $2 billion just in interest on that debt. Not paying down the principal, just interest, $2 billion daily. And who's been buying that debt for the past 2 decades? China, Japan, foreign central banks looking for safe, stable returns. But here's the problem. Safe and stable only works if everyone believes the US will pay it back. And China just signaled they're not sure anymore. Now the Treasury Department will tell you this is fine. They'll point to strong auction results. They'll talk about domestic demand. They'll reassure you that US debt is still the safest investment in the world. And technically, they're not wrong. US treasuries are still the global benchmark for risk-free assets. But risk-free is a psychological construct. It only exists as long as everyone believes it. And when your largest foreign creditor starts dumping your debt at unprecedented rates, that belief starts to crack. Let's talk about what's driving this. On the surface, the explanation is simple. US-China relations are in freefall. Trump is threatening tariffs again. Biden kept most of those tariffs in place. Both parties are now competing to see who can be tougher on China. Semiconductors banned, advanced technology, export controls, TikTok banned, Huawei sanctioned, Chinese access to US financial markets restricted. From Beijing's perspective, the first phase of a strategy to strangle China's rise before they can challenge American hegemony. And China is responding the only way a rational actor would, by reducing their vulnerability. Because here's the ugly truth about holding $1 trillion in US Treasury bonds. It's leverage, but only if you're willing to use it. And using it means selling, which crashes the value of your own holdings, which hurts you as much as it hurts America. It's a deterrent that only works if you never pull the trigger. Except China is pulling the trigger, slowly, methodically, 53 billion at a time, and Washington is pretending not to notice. Now here's where it gets strategically fascinating, because China isn't just divesting from dollars, they're building an alternative. Let's connect the dots. Dot 1. The BRICS Currency Initiative. In August 2024, during the BRICS summit in Kazan, Russia, the member states, Brazil, Russia, India, China, South Africa, plus the new additions like Saudi Arabia, Iran, UAE, announced they're developing a common currency for trade settlement, not a full replacement for the dollar, not yet, but a parallel system, a way to conduct international trade without touching dollars, without clearing through New York, without exposing themselves to US sanctions. And who's leading this initiative? China, with Russia as the very motivated co-pilot, since Western sanctions cut them off from SWIFT and the dollar system entirely. Dot 2. The yuan internationalization push. China has been quietly signing bilateral currency swap agreements with dozens of countries. Argentina, Brazil, Pakistan, Russia, even Saudi Arabia is now accepting yuan for oil sales. That last one should terrify Washington, because the petrodollar system, the arrangement where oil is priced and traded in dollars, has been the foundation of dollar dominance since the 1970s. If the Saudis start accepting yuan for oil, the entire architecture starts to crack. Dot 3. The gold accumulation. While China is selling treasuries, they're buying gold aggressively. The People's Bank of China has been adding to gold reserves for 18 consecutive months. Official reserves are now over 2,200 tons. But here's the kicker. Most analysts believe China's actual gold holdings are significantly higher because Beijing has a history of underreporting strategic reserves until they're ready to reveal them. Why gold? Because gold can't be sanctioned, can't be frozen, can't be seized by a foreign government. It's the ultimate sovereign reserve asset in a world where dollar weaponization is becoming standard practice. So let's connect those dots. China is selling dollars, buying gold, internationalizing the yuan, building alternative payment systems, organizing a coalition of countries who are also tired of dollar dominance. This isn't random. This is a coordinated strategy to build a post-dollar world order. And they're doing it in plain sight while American policymakers debate whether TikTok is a national security threat.